Lesson 14.2 will deal with writing off and collecting uncollectible accounts receivable. In the previous lesson, in lesson 14.1, you learned how to estimate which accounts will become uncollectible. There are certain people that you are not going to collect, and there are certain situations that cause them to be uncollectible. In this lesson, you'll learn what to do when a customer accounts become uncollectible, when you actually know when you're not going to receive the money from the customer. Then we're also going to take a look at what happens after we've written them off and then a customer comes back in and wants to pay. When a customer account is determined to be uncollectible, the journal entry is made to cancel the uncollectible account. This entry cancels the uncollectible amount from accounts receivable in the general ledger, as well as the customer's account in the accounts receivable ledger. Canceling the balance of a customer account because a customer does not pay is called writing off an account. A customer should not be told that his account has been written off. A business should continue its efforts to collect it. So if you write off a business, you don't go out and tell them you wrote it off. You just keep trying to collect from them, and hopefully, eventually, you will get the money from them. After months of unsuccessful collection efforts, 3 Green decides that Edmond Hospital is unable to pay its account. January 25th, wrote off Edmonds Hospital past due account as uncollectible, $639.88, memorandum number 58. Because the amount has been determined to be uncollectible, the $639.88 now is an actual uncollectible amount. The amount of the uncollectible account is deducted from the allowance account. Accounts receivable is credited to reduce the balance due from its customer. And you can see now the new balance will go down. Edmonds Hospital is also credited to cancel the debt balance of the account, and you'll see now after you write them off, they have a zero balance. Allowance for uncollectible accounts is debited to reduce the estimate for future uncollectible accounts. So again, that balance will go down because it has been realized that we are not going to get the money from Edmonds Hospital. Next, we're going to record this into the journal. We have all of this information in our T accounts. We're going to put it in the journal. First of all, you write the date, the account title, allowance for uncollectible accounts. The memorandum is 58. We will put the debit amount of $639.88. Account title and the customer name will be slightly indented. We'll write the diagonal line because we'll post in 2 places, and then the credit amount. Going on to post. The journal entry to write off an uncollectible account affects 2 general ledger accounts and the customer account. We'll take a look at this real quick. You write the date, you write the words written off. And these are written in the item column of the customer account to show the full credit history of the customer. And then you write the journal page number, debit or credit amounts, figure out your account balances, and then finish up with your account numbers in your general journal. Reopening an account previously written off. A business writes off specific accounts receivable after determining it probably will not be collected. Sometimes after the account has been written off, the customer pays the delinquent account. March 9th, receive cash in full payment of Edmonds Hospital account, previously written off as uncollectible, $639.88. This is all recorded on memorandum number 71. And when you got the money, you gave them receipt number 695. Several accounts must be changed to show that Edmond Hospital paid its account. The accounts also should be changed to show the complete history of Edmonds Hospital with 3 Green. 2 journal entries are recorded for the collection of a written off accounts receivable. Number 1, a general journal entry reopens the customer account, and number 2, an entry in the cash receipts journal to record the cash received on account. To show an accurate credit history, Edmonds Hospital is reopened. Accounts receivable is debited to replace the amount previously written off in the general ledger. Allowance for uncollectible accounts is credited for $639.88 to replace the amount that was removed when Edmonds Hospital account was written off. Also, Edmonds Hospital account in the accounts receivable ledger is debited for $639.88. This entry to reopen the account is the exact reverse of the entry to write off Edmonds Hospital. Now to record the reopening of a previously written off account, we're going to take the numbers that we have in red and place it in our general journal. As always, we write the date, the account title, and the customer names. Accounts receivable, Edmonds Hospital, will be debited. Source document number, a diagonal line to post to two different spots. Our debit amount, account title in our credit, indented slightly. Our credit amount. After the entry to reopen Edmonds Hospital account is recorded, an entry is made to record the cash received on Edmonds Hospital account. March 9th, receive cash in full payment of Edmonds Hospital account, previously written off as uncollectible, $639.88, memorandum number 71. And you filled out receipt 695 when you received the money. The accounts affected, your cash is going up because we received cash of $639.88, so therefore we'll debit cash. Our accounts receivable is going to go down because your customer owes you less money. Also, Edmonds Hospital account is going to go down. And now you can see the entire history of Edmonds Hospital. They had a balance. You closed out their account because you didn't think they were going to pay it. They came back in, they reopened it, and now they paid it off. And their balance is 0 right now. Once we receive the cash, we have to go to the cash receipts journal and record it in our journal. Receive cash in full payment of Edmonds Hospital account, previously written off as uncollectible. We'll write the date, the account title, which is the customer name, receipt number, our accounts receivable column, we will credit it. We will debit cash. After you are done, you'll go through posting entries for collecting a written off accounts receivable. You'll post the general journal entries to the general ledger. You'll post the debit portion of the general journal entry to the customer account. You write the words reopen account in the item column of the customer account. And you post the cash receipts journal entry to the customer account. Just a little review before we move on to the work together problem. Our allowance for uncollectible accounts, remember that is used for your estimate of your uncollectible accounts. Like when we went through the percents of all of our sales on account and we figured out an estimate of how much we're not going to collect. Remember, it is an asset. It is a contra accounts receivable. That means it has a normal credit balance because it's opposite the contra account accounts receivable, so therefore it'll be a credit balance. We also use the uncollectible account expense. It is used when a certain customer will not pay, when we actually know that they're not going to be paying. It is in the classification of expenses, and again, it has a normal debit balance like the other expenses we have.